Hello and welcome back to Coin Lady channel, where we'll be bringing you all the latest and greatest in XRP happenings today. No matter what is done at this point, things will continue to decline. The value of the dollar continues to fall. Financial institutions are also struggling. The only way out is Ripple. Sure, that's a whole lot. However, cryptocurrency is the only way for the US government to recover now, particularly XRP. But there's a lot we need to cover, and given what you know now, I have no doubt you can predict the outcome. Hear this out. Even those who had never owned shares and had never benefited from the stock market boom became victims of the crash, which had undermined Americans' faith in their fragile banking system made up of thousands of small-town banks with insufficient size and reputation to convince customers that their money is safe. In 1931, as economic confidence continued to fall, a chain reaction began. There were over 2,000 bank failures. Financial institutions ceased operations after the crash. This, I believe, had a more significant impact on us. My peers and I are the us in this sentence. Quite a few people had savings, even if it was just a few $100 or $1,000. When we first arrived, there was no infrastructure to speak of. People's savings weren't safeguarded by the FDIC because it didn't exist. No means existed to restore financial institutions. As a result, you, the depositor, bore the cost of the bank's poor decision-making. When you went to withdraw funds, you discovered they were missing. When people heard that the bank down the street was failing, it would cause them to worry about their own financial institution, leading to a run on that institution. And the cycle grew worse and worse. About 3,000 financial institutions failed in the years that followed. After that, it looked like the entire monetary system was not only unreliable, but also completely worthless. Its total and complete breakdown. The Silicon Valley Bank has sent ripples through the global business community. As of Monday, after the FDIC took over, customers had access to as much as $250,000. Nonetheless, as ABC Jacqueline Lee points out, that's not nearly enough for many businesses that are still having trouble keeping their finances in order. Concerned about the bank's health, depositors rushed to withdraw their money on Friday, prompting the FDIC to shut down Silicon Valley Bank, the 16th largest bank in the United States. The entirety of our funds are safely deposited there. Our payroll system is in disarray, and I have no idea how to fix it. Outside of the Silicon Valley community, they have a low profile. The bank's California and Massachusetts locations cater primarily to clients in the technology and venture capital industries. Shopify, ZipRecruiter, and Pinterest were among the clients of the bank. Streaming service Roku disclosed to the SEC that $26 million of its $487 million in cash reserves were held by a single bank, and that these funds were largely uninsured. Boston-based VC firm run by Adrian Mendoza. The demand for dollars outpaced the bank's ability to provide them. The FDIC estimated that Silicon Valley Bank's total assets were about $209 million, while the bank's depositors had about $175 million. The financial markets were shaken by the bank's failure at the end of last year, and the Dow Jones ended the week down more than 300 points. It is and should be concerning when banks incur financial losses. The Federal Deposit Insurance Corporation (FDIC) and the United States Department of the Treasury claim they have a plan in place to handle bank failures of this nature, and they further claim that the banking system has been strengthened since the financial crisis of 15 years ago. They've got a lot of good stuff going on there. The financial crisis altered risk management practices, making them more modern. Therefore, I believe the banking system is as robust as it has ever been. One's deposits with the FDIC are protected up to $250,000. There will be no later than Monday for the FDIC to pay out to all insured depositors. Reporting from New York, Jacqueline Lee of ABC News. Please accept my thanks, Jacqueline. Along with this, Governor Newsom has issued a statement today indicating that he has communicated with the White House and the Treasury Department regarding this document. Jobs, people's livelihoods, and the entire innovation ecosystem that has served as a linchpin of our economy are all at risk, so everyone is working with FDIC to stabilize the situation as soon as possible. In the banking sector, the value of the dollar has been affected by a repetition of events from the past. Recession is likely to occur now, given this new information and the ongoing rate of inflation that has been happening since last year. Don't even start me off on that. Worse still, the United States government is actively working against the only realistic means of evading their predicament. John Deaton's tweet contained a humorous joke. This is starting to make sense. After Jim Cramer recommended buying $SIVB stock from Silicon Valley Bank a month ago, investors have been buying up the company's shares. A California regulatory agency made the decision to shut down the bank today, making it the second largest bank failure in US history. Here's the most intriguing part, though. Every day, the crypto system advances further. With the advent of Know Your Customer KYC, investors will be better able to safeguard their funds, especially in the volatile cryptocurrency market, from the threat of theft. A user's ability to access their cryptocurrency holdings in a wallet hosted on their own servers is one example. Here, pay attention. Gray Wall, Coinbase's CEO. Mr. Armstrong has previously argued that people should withdraw their cryptocurrency holdings from exchanges and store them in a wallet that they host on their own servers. Do you agree that the first step in protecting consumers is to ensure that they have the option to self-custody their data and thus avoid any third-party risk? Yes, sir, Representative. Yes. Therefore, if they had custody of the assets and it was in, they could help those who had previously been caught in bad investments due to the lack of regulation in this area, where people have been abusive and even dishonest. Currently in their possession. How much did they have to worry about when dealing with a centralized administration? Failed miserably, collapsed into bankruptcy. Certainly not, Mr. Congressman. As a result of the fact that they are legitimate owners. Belongs to them. It's like having an account at a bank. If the bank goes out of business and you still have your money in cash, you didn't lose any of it. True, not everyone will opt to do so, but that doesn't mean we should outright forbid the practice. Similarly to cash, we have made it nearly illegal but not entirely taboo. Furthermore, there are those openly advocating for the criminalization of self-custody in this community. Due to developments in cryptography, the stability of the banking system and the value of the US dollar are both deteriorating. It's important to reevaluate our holdings every so often, and stockholders in particular need to do this. The United States government's ongoing war against such investments means that only crypto can provide a safe haven. For this reason, Binance ultimately decided to suspend dollar to cryptocurrency transactions within the United States. In my opinion, the United States is attacking the one industry that can unseat the dollar as the world's reserve currency because its leaders fear falling behind. I believe that the government, rather than fighting cryptocurrencies, should work with them instead. In addition, the government's position as the world's reserve currency would have been strengthened had they worked with Ripple to develop CBDC. The cryptocurrency market may seem like the Wild West, but trust in it anyway. XRP claims to be the only cryptocurrency that has a chance of making you a millionaire. Always think carefully about your trades and do your own research. Bear in mind, fellas, that we are not licensed financial advisors. These videos are meant to be watched for fun and entertainment purposes only. Tell us what you think by leaving a comment below. Have a chat with me. Thank you for tuning in. If you enjoyed this video, click the like button. Don't miss out on any new content. Subscribe and enable push notifications. See you later. Bye.